Good afternoon. My colleagues and I are strongly committed to bringing inflation back down to our 2% goal. We have both the tools that we need and the resolve it will take to restore price stability on behalf of American families and businesses. Price stability is the responsibility of the Federal Reserve and serves as the bedrock of our economy. Without price stability, the economy does not work for anyone. In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all.
Welcome everyone to the Kendall Report. I had to play that clip at the beginning. I have to tell you, the clowns that are running this planet right now and the things that are going on are amazing. So watching that press conference today was the funniest thing. Those of you that were on the call today, I told you any one of us could have written the script that he was about to say. And it's the same old story. Price stability. I told you folks that they're going to hold the line on this inflation. And I see that just in comments, a lot of you real bearish. You're going to be really disappointed. I hate to say there's some challenges in the very short term. I mentioned last night 37.50 was a buy, 56. I own them pretty close to that. Money's where my mouth is. We bounced 25 handles already, and I think we're going to see some interesting things. We've got a lot coming, to come out yet this week, right? We still have, we got ADP numbers that came out. We've got employment numbers coming out. We got all kinds of stuff. So don't get ahead of yourself. And the patterns that I've been talking about are still intact at the moment. Now, like I said, there are some challenges. I'll go through all the technical details in a minute. But just going back to Powell for a minute, we have the tools talking about how the quantitative tightening is going to lag. I mean, all this stuff. I mean, it's just amazing. And I mentioned in today's call that we were on is that there wasn't one of the members that had a dot plot 1 year ago that had anything above 0.75 in yields as they look out the year. So they have no clue what's going on. It's an experiment with the American people, and all of these central banks are just in cahoots with each other. I've been saying this over and over. You're going to see things coming out. I was just looking at some elements that were coming out, some flash news, and there's just so much going on in the world right now. North Korea is shooting missiles out in the water. I mean, it's just a shit show, folks. There's nothing else to say about everything that's going on. But meanwhile, what we saw today was pretty big decline, right? The S&P down 250, NASDAQ down at 3.36, Russell down 3.36. All that overperformance in the Russell I was talking about, a lot of it got taken away today. But it's starting to stabilize a little bit. Everything's kind of rebounding about the same amount at the moment. We were negative earlier in the reopen of the session, and that might be, we'll see how it all sets up as we go forward. But we also had all 11 sectors negative yesterday, so it was definitely an ugly day. And you have to be careful, and I share this with you folks because I get myself out of the mentality. You have to be careful getting locked into the emotions of watching what happened yesterday And just because that happened yesterday, it doesn't mean it's going to happen tomorrow. We're going to move forward in everything. And, the Fed, I don't think the Fed said one thing, actually, that they didn't already tell you. So did something really change today? No, the algos took over. We actually bounced almost right off of R2, and we printed pretty much inside of the market grid. So we didn't get to any extremes. We're really just in an elevated volatility range right now. I'm just looking at the some of the things that we had come out yesterday economically. Nobody cared about anything except for the Fed report. I just want to cover some of these things, and we'll go back to setup that I want to talk to you about. But tomorrow we have claims coming out, expected 222, continuing claims at 1.438 last time. I've been telling you about that 1.5 number. Maybe that's going to punch over 1.5. I thought that I'll go through these reports and I'll go back to the Fed, but we definitely have Q3 productivity coming out. We've got the expected to be up 0.05. The previous was the worst productivity report, I think, going back like 40, 50, 60 years, big number, and it was minus 4.1. You see productivity dropping at that level. That's pretty ugly. Now they're expecting a little rebound of 0.05. I'm not sure it's material. Factor orders to come out at 0.3, and we're looking at the ISM non-manufacturing at 55.2. So let's just go back to the whole dialogue of what Powell's talking about. He says they're going to stay the course. That's been my dialogue. I told you they're going to tell you that. They're going to use these other central banks to change sentiment. Right as you think you've got what the Fed's doing, there's going to be other activity that's going to continue around. I saw a couple reports come out that, ECB, all this noise that's going on right now. One of the more interesting things right now, I think, that is happening is the Turks are talking to the Russians right now. And if they come up with a ceasefire, you realize what's going to happen in this market? If you're short, you're going to be really wrong if that happens. I'm not saying it will, but I'm just telling you right now that there's some back kind of what they call it, backroom kind of negotiation stuff going on, and it only will take a couple stories to trigger something. I think they're allowing the boats to go in and out, all the craziness that's going on over in that region. So Turkey needs the wheat, so they want to get everything open. And if you look at the geography of the world, you'll understand why Turkey wants to talk to Russia, and they want to solve this thing, while it appears that the Westerners don't want to solve the issue. And who knows what comes out of this? Maybe nothing. But I can tell you that any kind of legitimate ceasefire would be probably a crazy spike. I don't think that's going to be a negative event. And I'm not predicting that, okay? I'm just saying that I'm going to show you in the technicals that these weekly algos are really starting to come on in the next couple of weeks. And I think I will continue to tell you that I think the 3502 print that we had several weeks ago is still a significant number, and the patterns that are setting up are still significant. We still have the trade on that we put on a couple of weeks ago at 37.71. So basically it's 37.72 even on the trade on from the model trade that got put out by Wavetech. So we're just seeing pretty much what I was talking about yesterday. If you see a move down into the 37 handle, it's probably going to represent an opportunity. It was definitely a big move, very emotional. All of that stuff happens. Let me just look at my notes and see if there's anything else I need to discuss. Yes, earnings, 639 of them coming out on Thursday, along with the other stuff. So earnings are going to come back into focus. this Fed thing's behind us. Everybody knew what they were going to say. They said what they were going to say. And like I said, there's anybody on this podcast tonight that couldn't have written the script of what Powell said, just thinking about what they've been saying. They're going to continue along those lines. And I was joking today in the live stream that they haven't broke anything yet. They have to break something, and they still haven't broken anything. And there's elements out there that if you're in the real estate business, you're feeling it big time. But if you're not in the real estate business, you don't feel it at all. And in fact, as I talked about earlier, the economy is actually quite strong, even with the higher prices, all the stuff's going on. We're continuing to see pretty robust economy. These numbers are coming out of, when you look at these metrics, we don't have them coming out, but retail sales and other elements that are happening, and looking at these earnings. I mean, today was a core report on earnings. Tomorrow is this is core economy. We're looking at energy. I know ConocoPhillips is coming out, PayPal, biotech, hotels. It's like the core of the economy that's coming out. And so there's a story being told there. And right now it's, while we've seen some crazy earnings and some misses, we're really seeing everything pressed. One of the things I talked about on the sheet here on this page, you can see the most active symbols on stocks from a volume standpoint, and Amazon was on top. I mean, a lot of these big tech stocks. I got a story I'm working for you tomorrow night, so don't miss tomorrow's podcast. It's going to be the final nighttime podcast is tomorrow night, so I'm going to try to make it to a grand finale. So I've got plenty to talk to you about tomorrow night. Got some interesting thoughts that I have been working on. Don't have all the equation figured out yet, but I got enough of it figured out that I can tell you about. So just know there is 639 reports coming out tomorrow. There's going to be a lot of influences. Nobody's going to be thinking about the Fed tomorrow, I don't think. There'll be some background noise. This story is going to move from page 1 back to page 20 really quickly. Everybody's going to start looking at the earnings and then coming in to employment and all that on Friday. So hang on. Let's go ahead and take a look at the database, see what's going on there. So here we go. We did see a little bit of selling. We're at 45.14. We were 46 and change yesterday. This is one of the more interesting reports that I've seen for a while. I mean, it's crazy. I wrote down in my notes here, crazy. We had 1,383 buy signals, but we also had 2,459 sell signals. I don't think I've ever seen such big numbers on both sides of the equation. Usually there's an imbalance when you're looking at this stuff. And this time, just huge numbers. There's a total number of stocks here at almost 4,000 stocks that are being affected, even long or short. And the differential, the net sell is 1,076. So just a lot going on. Like I said, I can't remember a time when I've seen the database have that much activity on both sides of this equation. Not sure what it means, a rotation going on. Maybe it had just a lot to do with some of these small cap stocks. Like I said, there's 15,963 symbols in the database. So there's a lot there, and just a big giant rotation with a slight negative on the rotation, but we're still at 45.14%. So that 42 number is important, and I don't know if we're going to get any more traction in this. We'll see what sets up over the next several days, but it does. I'm anxious to see how we finish this week and how the intermediate database comes out on Friday's run. So let's go ahead and take a look at the S&P. So going to the S&P, one of the things I was talking about yesterday, we have the algos are suggesting that we're going to continue to drift in this pattern. And I'll go over to TradeStation here in a minute, and we'll take a look at exactly what kind of retracement values are going to be good. But you can see the algos are on PPM1 is continuing to decline. We're below the 10-period moving average now, so it's starting to roll this over. The key elements to look at here is what's going on with PPM2. PPM2 is basically flat, which is right now that average is 37.43. That was 37.50. That was the number I came up with last night. That's still a valid number. We can stay above the 21.40. The 40 is 37.80. So I would like to see a close above that level just to get the pattern in. There's nothing really bullish in this pattern. It's really setting up a consolidation. And we've seen these patterns where this is the secondary pattern here. And like I said, in a minute, I'll go over and we'll take a look on TradeStation. It'll be a lot easier to get some Fibonacci retracement numbers out of this. But the point that we're seeing here, I want to go to the weekly, and just so we can see this pattern here. It's interesting because yesterday's action, the PPM1 is still down at 0.74, and this is still a negative pressure. We were able to get up to the 21, which is at the 3,900 handle. Today we got rejected out of there, 39, I believe 3902. I don't have the dailies up, but it looks like, I think the high, let me just look here. Yeah, actually 39.28's been the high this week, but it wasn't the high today. But we've got a rejection there today. We'll go back to the daily here in a minute. But the algos are moderating here a little bit from the standpoint of what's happening. But it's suggesting that we could come down deeper into this right shoulder here. And maybe, let's go over to TradeStation since I've been talking about it. Let's just take a look at a couple things that are happening here. That is DXY. Let's get to so the trade that came on the other day was at the 37.71 level. Got a buy signal. PPMs are like trying to tick up here. We're right into this support level. Let's go ahead and just do a Fibonacci retracement value here real quick. So right now we're basically a 50% retracement from the lows that were down there. This is a rough number. I did it very quickly, but we're right there at 50%. Is 40%, 37.68. We printed a little bit below that. 50's 37.20. So watch for that area to hold right there. And this is a potential. I like the formation here on the PPMs. They still look pretty good. We got a plus 0.26 plus and a flat and a slightly negative here on the dailies. But this trade right now is not going to exit unless we close below this 37.40 level. If we get below that, then we'll probably go flat again and maybe the market rolls over. But let me go back one more second here because there was a number I wanted to see what 0.618 is just very quickly. Yeah, so 0.618 all the way down 36.50, 36.58, 36.50. That's pretty deep. If we get down there, this trade will be exited long before that happens if we do continue to drift lower. I think Thursday is going to be a pretty key day. Like I said, lots of numbers coming out. The high so far has been 78. We're trading right at the highs. 76 so far is last trade here right now. So we're still seeing a little bias to the upside. And if we can get back above the 10-period moving average here, which right now is 38.30, that will be interesting. So let's take a look at the market grid here. And for today, S1 is 47. So we've been right down to almost to that level. We had a 56 print. 47 is actually maps out really good with the 21-day moving average 37.43, and the 38.30 is the 10 average right now. And then what we're looking at from the standpoint of markets rallying back, the R2 level is 38.13, R3 38.36. So I think we probably satisfied S1. We've just about traded R1. So look for R1, R2, maybe just a print just over 3,800. See if we get any rejections up there. If they print through 38.13, and we're probably going to follow through towards R3, probably finish the day positive. But that number, mark this one down, 38.13. If we don't penetrate through that tomorrow, then watch out for rejection back down into the range and maybe printing down, toward this S1. Potential would be S2, which would be 37.24, which puts us into those more critical Fibonacci numbers. So next, we'll take a look at the NASDAQ. This is the daily. And there we go. I'm just trying to get this thing to light up. I've been having these issues with this. Let's go over to TradeStation. I've been having issues with TradingView the last couple of days. So let's go back over and go over here. And let's just go to the NASDAQ. 10,891 up 0.34 right now. And what we're looking at from the standpoint of the pattern, this is already starting to get deep. We have downward fib projections right now for a move lower here. And all the PPMs have turned south here on us. And we're starting to see some pretty serious moves to the potential moves to the downside. With fib target 1 right now is 10,489, 10,000 even 13, and then down a bit more. This is the daily patterns. But if we just look at it from the market grid, the key level is going to be, just like I said, S1 10,837. So we've been 10,901. So it looks like S1 could be satisfied, but we're definitely we're at a very critical phase here. The NASDAQ is much weaker, as it should be, just based on really it's all of the large tech stocks are under serious pressure. There's very few stocks that look good at all in that pattern. So what we're looking at from this viewpoint here is really, we've got to hold here. The lows on the NASDAQ maybe are more vulnerable than the S&P right now, as that low is let me get the exact number, 10,484. So we're pretty close to challenging that low. And a lot of times you get into these kind of patterns, and just as a warning here, what you'll get in these kind of patterns, you'll print a new low and then you get a reversal. So watch for, if we do get a new low, watch out for some kind of reversal pattern to set up from there. If you don't get immediately follow through in a downside, that'll be the case. As I've been telling you, I'm looking forward to next week, because no more nighttime, no more guessing what's going on in the market. We'll be following the markets real time next week. So just know 9:15 Eastern is going to start the show. Just want to tell you that while I'm going here. And the plan is to have a premiere so that you'll be able to get into the room before 9:15. When it comes 9:15, I'm going live. I'm not going to do the runoffs like we've been doing and waiting for people to fill the room. Show's going to start at 9:15, so be there. I used to always joke that for some reason or another, they never waited for me to get to the trading floor before they opened the markets. The market bell goes off, it starts. So the plan is to be live right there at 9:15. And like I said, right now, the plan is to go to about 10:30, be an hour and 15 minutes, something like that, every day. That's the plan. I think there's going to be a lot of modifications once I get into this room and start running it at a different. I've got a plan. We'll see how well it works on paper. So thanks for listening to that. But back to the NASDAQ, watch for that reversal because that is highly likely to occur. It just, people think, oh, they took out that low sell. That I tend to be, if you come into the live room, so if you buy the indicators on the link above, if you come in the live room, I tend to be a buyer of new lows and a seller of new highs, depending on where it's at in the pattern. And you just see it so many times. It's like they go fishing for stops, and it just reverses from there. Those are really, really good points. So just watch that action around that level if we get any weakness. Right now, it's up 0.31, so there's a little bit of a bid. We're slightly positive, and the level on the upside looking for R1, 11,031, R2 is 11,129. So I'm basically looking for those kind of parameters, S1, R2 for today. I think for Thursday, we should get a rebound of some sort. And so we'll see how it all sets up. But that's my expectation. And so we'll continue on. Next, we'll cover the Russell. Russell also has this negative algo, suggesting we're going to retrace. We're probably going to see at least, looking at the values here, while this indicator is declining, if you look over on the far right-hand side, the values that it's projecting, it's about probably, we'll say coming into Friday will be the critical point in how this market's going to continue. So we've traded right up to the 200 and got basically rejected off the 200. The last couple of days, the high was 1876, the 200, 1867. So we basically got a rejection. We look at yesterday, the 1866, 1869 was the high. So this 200 is still kind of a ceiling. We've seen this hit several times in this decline, and it continues to be a significant number. And Russell got there first. Same thing, like I said, the algos are suggesting on PPM1 that we're going to flatten out. We're trading a little bit below the 10. The key numbers, once again, are going to be 1761, 1764. That's going to be your pivots. We get below that, we could trade down a little bit. But the algos are suggesting on PPM2 that we're going to stay, most likely, we're going to call it about a 60% probability we're going to stay above those 21 and 40 period moving averages on a closing basis. Doesn't mean we can't spike under that. Just we should stay above those levels on a closing basis. And it's appropriate that the 10 PPM1 is showing these negatives while the other two are showing flat, stable to turning up. So these, as long as we stay above these averages, we're going to start to see some of this, some upside bias, I think. If we get below those numbers, then all bets are off. I'll cover that as we go through it. Okay, now for the fun stuff. We're into the treasuries. Treasuries continue, as I mentioned last night. I think we're going to stay in this market grid range. I'm just going to change this for you so you can see this. We're really looking at the range. I talked about the extreme downside is 392 right now. Upside is 409. I just think we're going to waffle in these ranges right now. And we're just looking at right now this is the weekly that I put up here. So we've got the weekly ranges coming in. 409 is R1 and S1 is 97 so far, or 92. So far we've had a 92 and a 408. So we've done S1, R1 so far. Above that, R2 is at 418. And I don't think we're going to see that print. I think we'll have an inside bar for this week. Go back to the dailies here. There's a couple of things going on. I've been talking about those values that we were looking at up here, these fib targets at the 503 level. Well, those got moderated today after yesterday's action. We have some new upward projections now. 460, 497, 515 is extreme. So they've moderated a little bit, but 460 is still on the books. And the algos are suggesting sideways stable. And then we start to see everything turn back up again. So we're a long ways from these interest rates being bottomed and doing anything negative. And not to try to, I haven't confused you over the last couple of days. I was talking about this 475 number out here. This is the daily chart. So we're seeing this type of action come out. And I'm going to go to the weekly just so you can see that. And that even makes it clearer about the sideways range. The only thing that is likely to happen is we're going, like I said, 392, 409 right now. It's sort of like in crude oil, which I cover next, is we're getting those broad ranges and stability setting up. But the algos are suggesting that we're going to just stay sideways at the moment. We're not going to see any real down, and the upside is somewhat limited as well. Bear with me 1 second. I'm getting the scaling. So, okay. So next we'll cover crude oil. And crude oil, as I've been talking about, has some, this is the weekly, has some upward projections. We're looking at 107. I'm rounding numbers, 118, 126 on the upside. And the algos are suggesting we are going to start to turn up, that there's still some pretty substantial resistance between 94 and right up to 98. Before we start to get these patterns, it's going to take a number of weeks to get there. If we go to the daily charts here, what we're seeing is the potential, and I talked about this, that we've got some upward projections. It's interesting that fib target 1 on the upside is 98.69, 98.75 is the 200-day moving average. So, but there's a but. The algos are suggesting more of a sideways, potentially seeing a little bit of a downturn. So we're likely just to be in a broad trading range here. I'm going to take just a second to draw in what is likely here. So this is pretty much what looks like what we're doing here. We're probably getting a double zigzag, some kind of pattern here. The 200 is just going to continue to move over here. You'll see it. This will be the ceiling. So we'll just end up with some kind of sideways range here. I don't know how drastic. I didn't draw this to scale, so don't say that that's what I was saying. I'm just saying this is going to be the structure of the markets that we're likely to see coming through this. So those should be really good parameters if you're trading oil. So we'll go through gold next. Gold's got some interesting, I've talked about these fib targets up here. This is a daily chart here, all the way up to the 200-day, that's 1806. The pattern that's setting up continues to have a bias, but it's really the same scenario that we're seeing across the board, is that these are just trading ranges. So they drop down really big, they tend to rebound, go right back into the range today. And in fact, if you were watching the live stream, the scenario that happened then, when we spiked up to the 38.95 level, I was saying we're going to come back into that range that we were in. So at least 50, 60, we started getting targets for 38.20, and then next thing you know, we're getting 97 handle projections. And as you know, the market just came apart all day. But that move up to the 3,900 level was not a valid move. It looked like they were kind of stabilizing, but all of a sudden, all the algos started predicting we're going to see a pretty big downtrend. So as we look at this right now on gold, gold has all positive. It looks like we should stay in the sideways range, probably within 16. I've talked about this before, 1660, maybe as high as maybe 1675. That's going to be major resistance, but just look for this chop to continue in this pattern. Okay, the last market I'll cover tonight is Bitcoin. You can see we traded into these Fibonacci's. As I mentioned last night on the daily, we're still seeing some negative rollover. What it suggests, we're going to stay under the 10-period moving average, start to roll down into the 2140. So this is what I always call a sandwich, only this be a negative, where we're likely to stay under the 10-period moving average to 20,464 and trade down toward we'll call it 19,640. And if we get below that level, we do have some Fibonacci targets down here at 19,790, 19,299, and 18,995. And I've talked about this before, in that what we really have going on here is this pattern that, and I'll bring up the weekly next before I go on, but this is a pattern that is drifting down. We have these downward projections that I just mentioned. So there's still, it's the same pattern we're seeing on a lot of markets, where if you just look at this pattern up here, what we've got is just these giant sideways choppy ranges. So it's just not going up, we're not going down. We've just been stable. Let me go over to the weekly. Go back full screen. So you can see this pattern a little better on the weekly, but this is basically probably an ABC X ABC. As I was showing you last night, and this is kind of ominous, is that the algos are projecting basically a collapse of Bitcoin. And I talked about some of the numbers. I had it up on TradeStation, but there's some numbers down around 12,000, 10,000, and a crazy number to look at here. Here's the number right here. We're looking at right now at 9,800 is this little pivot that's been down here for a while. But my expectation is that we've got at least another week or so. And there's something I haven't talked about for just a little while, and I want to cover this real quick. Is when you see the narrowing of the market grid, that tells you there's a market change is going to happen, and it gets very narrow. But typically, it's a downside scenario that happens. So right now we're seeing that collapse of volatility. The ranges are getting tighter and tighter. And when that happens, it's coiling into a move. And right now, if the algos are right, we're probably in the next week or so, we're going to challenge 18,555, 18,002. Below that, it's no man's land, and things will get pretty ugly. probably if something like that's happening, that means we've had a complete failure in the equity markets and all that stuff's going on. So just know, in a summary for right now, let me just come up on another screen. Yeah, just as a summary for tonight's video, I'm really looking at just equity markets, slightly negative drift. We should stay in a range. We got to hold the 3720 on the S&P. That's the number that's coming up. And then we're seeing all these other markets, especially like Bitcoin, is probably correlated to the NASDAQ, at least normally it has been. And that suggests that we could have some downside. So we'll just put this puzzle together as we see it each day. I appreciate you all watching the show. Some of you diehards, man, appreciate it. Every one of you. You watched 3 hours today with me, and now I'm not sure, not quite an hour. So we're looking at about 40 minutes. So thank you so much for being part of the channel. Can't wait for next week. A new chapter in the Kindle report and doing live markets every day. It's going to be a lot of fun. It's where I really live, and doing these things late at night, I'm done. So we got one more. So like this video, and subscribe just like you should, and definitely get these indicators and get into the live room. All of you in the live room, well, I may be about a half hour late. I will send a message out to you, and we'll extend over for a half hour to cover that. So once again, thanks for being part of this channel and part of the Wavetech world. I'm looking forward to next week. Thanks again. See you tomorrow night, same station, same place.